This is general advice, my opinions, and for entertainment purposes only. CFDs are high risk, past performance isn't reliable. I may be long or short CFDs and stocks mentioned. Content may contain language that offends some viewers. Right, next one, mate. I haven't had a look at this one. I know you've had it for a while, and I assume the fucking rate of gold price rise significantly has an impact on the value of this company on a MPV basis. Saturn, a heap, low-grade heap leach operation. I assume that really changes the landscape of that company, the gold price rise. Talk to me.
I think it does, but I think you just need to wind back to the asset scope as well for this one, because if you talk to anyone in the Australian market, and whether that's a retail investor who's done a bit of homework or an institutional investor, and anything in between, there's a lot of people that go, all right, grade is really, really good. So the higher the grade, the better. And if it's a 1.5 gram open pit, that's fantastic. If it's a 10 gram underground, that's awesome. Geometry comes into this, and there's an assumption which anything you mine in gold is going to be reasonably narrow. I think that's what underpins the grade is king expression, which so many people throw around. And don't get me wrong, if you've got an ore body of X thickness, pushing the grade up is an outstanding thing to be able to do. In the case of Saturn, the ore body there is 100 plus meters thick. So any mining shape you put around it is going to have a low waste material movement that needs to go along with it. And for that reason, it's extraordinarily economical to mine. So just from a mining perspective, that's kind of a really good start. Processing then, a lot of ore bodies are sort of amenable to heap leaching, but a lot of them get a bit complex when they've got sulfides within them, or if it's very fine-grained gold, which is caught up inside of quartz veins. There's all kinds of ways that it can be problematic to get cyanide to where the gold is. So in the case of the Saturn ore body, which has had an immense amount of test work done on it now, gold is located right on the margin of an array of very, very small quartz veins. So you look at the rock and you just go, is this even ore? It doesn't look like gold ore from the gold fields. But then, drilling it, you've got this immense distribution of gold through that. So, if you were to start comparing costs, moving a ton of ore in a 10-to-1 strip open pit in Western Australia probably costs you let's say $4 a ton, makes the maths easy. So it's $44 a ton by the time you strip it and put the ore on the ROM. And then processing might cost you $20, $25, $30, depending on where you are in the scale equation. So you're at about $70 a ton OPEX. To move material out of the Saturn pit, instead of doing a typewriter sort of configuration where you're doing tiny flitches over bigger blasts and or even underground, it's 2 passes with an enormous digger. So there's a fair bit of efficiency creeps in there. But even if it was $4 a ton, I think it's a bit less than that probably for these guys. But strip ratio of a bit more than 2 to 1. Yeah. You're not spending an awful lot of money to put it on the ROM. So let's call it 4 by 3.5. So, it's somewhere between 12 and $16 a ton mining cost. And then the process cost is low because you're not grinding down to talcum powder. You're crushing to about 8 millimeters, which is reasonably fine for a heap leach, but it gets excellent percolation as a result. So, you trade off lower recoveries, but a dependable mid-70% recovery over the life of one of these enormous heap leaches. In WA, I don't think there's much familiarity with these. Telfer had one years ago. It was very big and it was problematic.
Nifty?
Nifty had one for copper. Yep. I don't know too much about the performance of that. Goldfields had one, at St. Ives, and that was a wonderful addition to the process there for a long period of time. So
it's more Eastern States copper and stuff, isn't it, that you see a lot of the heap leaches out Tritton and Ningham way?
Well, if you want to see what heap leaches look like, you need to go to North America or Europe, where they're far more a bread and butter. So, and I think ore that suits it is something that's important. So, gold price is definitely a leverage on the value of the project, but it's from that very, very low cost per ton starting perspective as well. So I think for that reason, you can have a much, much bigger margin than a lot of people expect without having to have the gold price run. But when it rips, it makes a big difference as well. So the biggest thing for Saturn is that people expect that heap leaching is going to be pretty quick and dirty. It's not. You still need to invest considerably to make it happen. There's a lot of civils involved in setting up a heap, and to sort of engineer the recovery to be what you want it to be, you need to make sure that investment's in place. So, their next conundrum is finish your DFS and be looking at funding as you go. But given the way that gold has performed, I think there's going to be a funding wall that's coming through of banks and other parties that want to see money going into the ground. And they've got an unusual register as well. It's not entrepreneurs, but there's 3 or 4 funds on there that have been there for a long time and have big positions. So I think there's a fair bit of funding capacity and sophistication around the company to see that grow too.
What because it's like 10 million tonne a year, isn't it? What's the like for like on the? I know you said the civils and everything, and they obviously they need a fucking big primary crusher. What's the like for like capex comparison? Because obviously they're never going to build a 10 million tonne CIL plant to treat it. How much do you reckon they're going to save by going down this method?
So it's about a 450 million funding requirement, I think, off the top of my head. Their PFS came out just before Christmas.
How many ounces does that give them?
That's a 1.6 million ounce reserve, 1.6, 1.7, and it's over 100,000 ounces per annum. So for 14 years of production. So it's not on the high side as far as scale per year, but it's on the longish life side of project life cycle. But what would it be for a 10 million tonne per annum CIL? I don't think you'd be getting away with 450 mil for your capex there. I think you'd be talking north of 600. And I suppose a lot of people, you can probably build a 10 million tonne plant for, not double the price of a 5 million tonne plant. But, so capex can have a lot to do with your mine establishment as well. And given that a lot of the process capex for these guys is going to be waste stripping, you kind of get an efficiency of preparing the mine to be able to produce. Although in something which is a less than 1-to-1 strip ratio in the first few years, there's not a lot of waste going around. So you need a bit of that up front. And you need to go right into the hanging wall to get it. I feel so. So it's I think to set that up as a CIL, if you tried to do it on the same project, you'd be talking probably 900. So the capital efficiency is better, and you're trading off. I don't know. It's probably 15%. 18% recovery in doing that. So, but I guess then you'd come around to the amount of water that you need for a big plant, 50 k's south of Leonora. Water is sensitive everywhere. Is there a bigger? There's definitely a bigger funding risk. Is there a bigger permitting risk if you go down that pathway? I'm really not sure. So I can see advantages to this heap, which not only is because it definitely suits the ore body, but it's also something which I think you can pioneer in Western Australia without perhaps quite the same difficulties that there might be for a big Boddington size thing going in south of Leonora.
Yeah, you can see the conundrum they're in. Like if you're looking at peers to say that they're going to probably need half a bill to 100,000 ounces, like just that's getting a bit tobby, yes, but it's like, we've got long life, it's low cost, it's but this is the market to do it in, to get the money for it. And it'll be just on execution. And I mean the thing which always interests me about companies like this is that they get discounted for one reason or another, and you can get all sophisticated about, is it this issue or that issue? I think with a lot of investors, and this is just as true of brokers and institutional investors, if you sit down and have a 5-minute yarn and you say, I want to tell you about this company, it's going to be a heap leach, it's low grade, it's this, it's that. There's so many things that creep into their mind which are, I'm not sure about this, I'm going to need this explaining. You've got 5 minutes to pitch to someone, and if you find yourself answering a lot of questions about whether or not it'll work, it tends to be it's not going to be the number one thing that people go to. So I'd say there's discounting in Saturn because of that. There's value that's not being realised by the market there. But
that's not to say that it's anybody's fault. I think this is something which does unwind, particularly as the market gets more enthusiastic about projects, particularly big ones. And this is a over 2 mil gold resource in one spot, one big pod. That's something that the market will go looking for. And at the moment, you stop someone on the terrace, Matty, and say, is half a gram dirt good? The answer would probably be no. So you need to overcome that. And but the people who've been looking at this, the people that I've spoken to over the circa 3 years of the journey of being a shareholder here, and the people who are turning up at their AGMs now and having a closer look at Saturn, I can see that process is taking place. This curiosity is set in. And if that curiosity doesn't exist, then they're not going to get to the point where they go, I'm happy to buy it. So that curiosity coming, I think Saturn's probably got, the gold price will help, no doubt, to drag people towards it. But with that in place, I think it's one which is set for a fair bit of investor enthusiasm as that understanding spreads.
I'd be interested to see the numbers on if hypothetically, if Genesis build their 3 million tonne mill at Leonora, they've effectively got a 1.4 million tonne toll treating mill left over at Koalia. As you said, 40 k's from Leonora. I'd be interested to see the maths on a low strip ratio mine like that and trucking half gram dirt into a mill, because I reckon you'd make money on that, punching 1.4 through a year. But I think Genesis have their hands tied elsewhere with who will be sending dirt to Genesis, who Genesis are already shareholders of.
Well, and, if I think running a toll treating business is probably also quite complicated. It's easy to stand up and say, we're good at underground mining, we're good at this and we're good at that. Every single parcel that comes in is going to be different. You haven't mined it. Your geos aren't accountable for it, but your Mets are. So,
See what happened to the fucking Bright Star dirt? Jesus Christ, that pissed me off. Fuck.
Well, this is the thing, right? And I don't have any background on that, but you tend to think, how does that happen? And is that because processing excellence has been going on or not? I wonder whether that's a complexity which eventually unpicks a long-term toll treating business and says, either we leave that plant closed or we tolerate this, but it's going to be, there's going to be reputations that come and go on it, or we find our own ore to go into it, in which case we just consolidate everything that we're trying to toll treat from. It's going to be interesting to see how that works out for Genesis over, I don't know, the coming 2 years or so. Particularly some of those toll treaters take that ore in-house and start processing it themselves.
Yeah, it's fucking easy money these days. I think toll trading's the business to be in. Like, the money you can make out of it is fucking, it's a piece of piss. Unless you get the Met right. Well, in that region, this wasn't on the list, but it was mentioned today in Genesis's announcement about Raleigh's new focus as executive chair, the Bardoc option strategy for the Bardoc assets, the refractory assets, which they wouldn't be too far from Saturn, are they? Different direction.
I think they're probably a bit further down towards Cal, but also closer to the highway is my gut feel.
Yeah, because Saturn's inland a bit. Where do you reckon? I floated my theory based on the connections and shareholding that I think it might end up in Gorilla, as due to Genesis's shareholding and how that's all interlinked. But maybe that's not the most value creation for a spin out and everyone getting them set personally in shells before they do it. What do you think the Bardoc assets are going to do? I just want to know what shelter gets set in personally, but fuck.
Well, every time the gold price goes for a meaningful move, there's some entrepreneur that starts thinking that refractory gold can get a lot easier. Rox is on your list to talk about, and Rox is one which has been, I think a lot of people have known about you and me, Chinese owner for a long period of time. It came to ASX. It didn't have massive hurdles which it ran headlong into, but I think it was a problematic promote to start with, on the basis that, and they talk about what proportion of the gold is free milling. I mean, there's still a refractory issue there, and that's something that they've had to overcome. They're achieving a valuation now which suggests that a lot of people are accepting of that. But if Rox come into production, run that mine, commission it, the first 12 months is is smooth on a processing point of view, then I think it probably opens the door. Refractory ore is not impossible. I mean, there's mines in China that I've visited that are 2 grams underground refractory, and they were making good money $2,500 an ounce ago. So, it's very, very doable. It's just not something that Western Australian market, which is what determines a lot of the sentiment for gold in Australia, is very familiar with. There are enormous refractory processing facilities in North America as well, so it's something they're a lot more familiar with. So you see Rock's making a great fist of it, and those Bardoc assets I think could make for a very, very lucrative, well, I won't say float, but listing via a shell for sure. And you just have to take your bet. I mean, there's plenty of lithium companies they could have gone into but haven't. So But, would you put it into something like a Gorilla, or would you put it into, if you were just going through the mindset there? I think it's an asset which has been passed around so much. You probably need it to be in its own vehicle so that it can really make a clarity of here's how we're going to make it work for this ore. Because if it's mixed in with something which has got a conventional free milling inventory, they'd probably find themselves with a lot of questions to answer as to why they're buying a large refractory inventory. Mark Ashley tried to do it once upon a time, pulled together a lot of refractory assets. Those Bardoc ones were amongst it. It all fell flat on its face. So it needs, maybe you sell them to Walluna. Those guys know a bit about refractory ore, but
I think it'll be interesting. The thing, I'm sure the thing that Genesis will have to weigh up, and the biggest question to them, because it's such a big company now, giving away stuff for fuck all into a shell isn't like, unless Genesis is obviously the cornerstone holder of that shell, but they can't really give a few million ounces away for nothing just because it's refractory. I think it needs to be done properly and show that there's been value for Genesis shareholders. That's going to be the thing that they'll be battling with, how to do that and look after themselves all, obviously, which is what you do. That's what I'll be doing.
You're probably also having a debate about, well, what are these actually worth to us? So we've got a value for them. If we're not going to process them, we need to bring them to account. I mean, I would argue that every single ounce on their balance sheet does not have the same value. Those ones would probably be fairly close to nothing. If you took them out, is the Genesis price going to fall by whatever they sell them for? No. It probably wouldn't waver. So if you're creating a new company which Genesis has an influential influence in, and whether that's something for a long-term holding, longer-term strategic consideration, or just to give it to your shareholders and distribute across your register as a freebie, they're all a form of value which could be brought to bear and would make those ounces more valuable to Genesis shareholders. So the strategy has merit. I think it's, as you say, it's doing it in a fashion which is clean. And what did Peter Cook say one year at Diggers? I think it was something like,
it's only a reward if you're not in it. That's what he says all the time.
No. He said, I think we'll let sunshine be the disinfectant on that one.
I'm going to get him on here one day. That'd be he'd be fucking perfect.
It'd be a long yarn. There'd be so much to talk to.
When he talks about companies, he's like, mate, don't forget I know where all the bodies are buried in those companies. He's
still got the dirt under his fingernails.
Oh, fucking oath. He's a legend. Mate, I'll wrap it up soon. We'll finish on one of your, I don't forget which one we talked about there. Great Boulder. That one's talk about Murchison consolidation. Stone's throw from Paddy's Flat in Meeker. Obviously done a great job, bloody, growing the resource, or just always been strapped for cash. It looks like a bit of not the simplest ore body, a lot of crossing structures and everything. There's a bit going on with it, but they've put a lot of geological work into it.
Yeah, when we first invested in that, I used to joke that you could chuck a rock from there and you'd be able to hit Paddy's Flat. I've subsequently been out there. It's not possible to chuck a rock that far, but if you pick up a coffee in Meekatharra, and there is a very decent coffee caravan in the middle of Meeka these days, it's still hot when you get to the project. So, it doesn't take you long to get there. But this is, the Mika field occurs on the western side of a fold, and I'm saying this from my perspective, right? You come around the other side of the fold, and that's where Great Boulder are in there. That area has not been historically very thoroughly explored. There's a bit of cover, and some of it is literally that thick. Some of it's a bit thicker, but and the strip over Mulga Bill is leaching. Incidentally, it's not alluvium or anything like that. So it's an area which is arguably very, very prospective, given what's on the other side of the fold. They found stuff. Mulga Bill is in the core of the fold, so it's a really weird setting. And they're finding things like ironbark, which is in a much more that's probably Paddy's Flat, just repeated on the other side. So, makes me think there's a lot of smoke there and a bit to uncover. Commercialisation is always the question, and I think they're early in that journey. So, the questions they've got to answer along the way are, where's that going to be processed? Should it be in our own facility? Should it be in somebody else's? Should we split it and sell some and keep some? I don't know the answers, but they seem like they've got a bit ahead of them there and a bit to think about. But geological horsepower was one of the things we were backing there as well. So, team of geos who have thought that out and managed to put new ounces on the map, which is very, very impressive.
Dave, do you think they need to? It would be viewed differently in re-rate if they sorted it out and got 100% of the project?
When I've thought through the things and we do this with every company, right, that we hold, it's like, what's your critical path to being valued at 100% of whatever you're worth? And in many cases, it's go and develop your asset and become a producer or get bought or something like that. In some cases, it's do you have anything prickly in your structure that you need to sort out? And that part of it, it's a maybe. Scotty Wilson has never derailed a development. He's been a joint venture partner of a variety of projects. Dore at Andy Well was one of them, and they got off the ground with a lovely development there. So I don't think that that's an impediment. Would it re-rate if it owned 100% of it? Maybe. I'd say there'd probably be stronger re-rate catalysts. A discovery would be one. I think, even the problem for a lot of explorers that are at that stage where they're raise, drill, report, repeat sort of cycle of raising money, putting it in the ground, building ounces. The question is, what are you going to do? And there's plenty of companies which are assessing projects, and the implication is that they've crossed the threshold of what they needed to be consider themselves in the position to be able to do that. We had this discussion with Alto, in fact, before that was transacted into Brightstar, to say, look, you've got a lot of ounces, but the thing that the market seems to be worried about is you're just forever raising money, spending it, raising money, spending it. If you were to find a combination where you could say, we've definitely got a big enough inventory, we're going to start work on scoping that. And, you might race that or you might just slow it down, but it puts out of people's minds the discovery risk and starts to focus their minds on the value of exactly what you've got. And I think that's probably the no man's land which Great Boulder is in at the moment, which is that nobody really knows what the development scope looks like. There's a scoping study over ironbark, but that assumes toll treating or something like that. So, that's not a pathway to being a bigger and greater company. It's something which, revenue will be what it is on the day, according to what someone will promise to pay you for your ore and charge you for processing. So I think, there's another re-rate catalyst for them is find someone else in the region which is similar sized, pull yourselves together and then say, right, we now have more than enough. Anything we find is cream on top. And what we're focused on is a process solution. We've got 3 or 4 sites across both of our projects. We need to decide where it'll be. Or if anyone else comes along with a mill, we'll think about that too. But it kind of puts the decision-making back in your camp rather than being dependent on anything that anyone else will give you. So, that's a bit of an esoteric one, but I wonder if that's probably a stronger re-rate. And you wouldn't need a joint venture partner to tip into that, or they could think about it along the way and decide what was best for them at the time. So, I'm not sure that that's a blockage, their JV. I think it's far more that question of how you're going to do this.
You got a lot of balls in the air at the moment, Heathers. That's what happens when you can't go more than 10%.
We're happy to go to high percentages. I think we're at 14% of Saturn, and we've got some big percentages.
10% of your fund.
Oh, yeah, true.
Yeah.
Yep. Well, that holds you back, but at the same time, we've been sort of 30, 40, 50% in things in the past, and that concentration can bite you. So, we're determined not to do that again. And if we do, it's not because we want to own 50%. You might as well own 100%, because if you own 50%, you can't control shit, but you get the shit kicked out of you for every single mistake. So, you might as well at least be accountable for it. We feel far more comfortable being an investor at the moment. The opportunities are thick and fast. So that's a great way to build value, but that's a second way out for us. If there's anything in the portfolio which offers superb value, it's not being realised, and we reckon we've got the financial clout to be able to transform it, then, we might very well just partner with them.
Yeah. Right, last stock, mate. Oh, bloody, this has been sensational. It's good to be back. I've still got it, mate. I can still talk shit on camera to someone. This is great. Lost some confidence. This is my second top holding behind NextGen, and I'm just thinking, fuck. It makes so much sense, but it hasn't really moved heaps yet. Torque Metals. TOR, right next to, logically has to go to fucking Higginsville or bloody St. Ives or something, and it's been a bit slow going. I don't think it hasn't really been promoted. The Cottesloe crew's got himself set in it, they did put out today that they're talking about the permitting advancing to actually start digging some dirt out. They bought in $15 million in the bought deal, so they're gonna need funding, no doubt. But potentially semi-high grade open pit dirt to send to a mill down the road on pre-native title. So yeah, it needs a personnel injection, I believe, to really fucking amp it up. But yeah, have you had a look?
I've had a look. Yeah, I've got probably similar questions to you, Matty, which is. It's beginning to be of a scale where you think, okay, there's something you can do with this ore. There's definitely enough to try and dig it up. There looks like there's been some great technical work done, and there's a lot of MDs and CEOs in this space that you can't knock them on the technical work they've done. Every company needs to be promoted so that it's well understood, and in small companies that can just be really difficult because you've only got time to do so many things. And sometimes you go out and promote and you just don't have enough to be able to interest people. So now, they seem to have many of those things falling into place. Done some interesting things over the journey. They bought into a lithium and tantalum project, which sort of went in and then went silent on it. But, I suppose bigger companies have done that too, haven't they? Developed did that and don't really talk about it.
Oh, they talk about it now. They talked about it a lot yesterday.
Yeah, leverage all of a sudden.
Yeah.
So I don't know. Torque is one which I've always found really interesting. Could it be processed at Higginsville or St. Ives? I don't know enough about. I mean, gold ore tends to be reasonably compatible between most mills. I know that when the oxide stuff was originally processed, I think it had some hiccups along the way, but fresh ore tends to be a lot easier to manage in any scenario. So, and gold processing's come a long way in the 20 odd years that between then and now. So, I suspect that that's something they probably need to show to the market. They did make a big event of the metallurgy that they did through last year, which I think was probably intended to address that very question, the compatibility with regional mills.
The copper and the sulfides. It's very similar to Bellevue by the sound. So it needs to be, cyanide washed, the pre-oxidation and oxygen levels. Like I saw the old Met reports from Jindalee. I don't know if the correct if that wasn't enough oxygen used in that. So I feel they have addressed it, but I believe it's fucking doable. It's But then I start asking you questions. Why isn't it being done? And is there something I'm fucking missing?
Yeah. Well, I guess just to extrapolate that, right? If you're selling really nice free milling, zero issues of any metallurgical sort gold ore to a mill, so let's say you're a New Murchison, right? There's two counterparties. There's the mill owner and there's the ore provider. Mm-hmm. As the toll treatment taker, the miner, if there's a little fuck up, and it might just be a diligence thing in a mill, where recovery falls by 2%, and that might be because you did something with throughput, or someone forgot to turn a tap on, or fuck knows, right? If you're the toll treatment agency, the mill, you go, oh well, I guess that's just too bad. If you're selling the ore, you go, well, it is too bad, but you guys screwed it up, so are you going to look after me? And the answer is no. So you lose money, and that risk of metallurgical issues becomes a fairly acute one if there are known issues, because what mill manager wants to put someone else's ore through, which is going to get reamed for if there's a recovery drop, and particularly if it starts to affect their own ore, even if it's like a 2 or 3% drop, it's still something they don't want to have to be accountable for. So I think unless a mill is starved for ore, or you're the small ore provider and you're able to acquire a project at the end of its life, you can manage that from end to end, and you can have METs that talk to GOs every single day. If you're selling the ore, there's so much breakdown of communication, quality metrics that don't get understood. Even with diligence on all parties, it's kind of like all care, no responsibility, as opposed to, if you guys fuck this up, we're all going to die. So you need to talk to each other, and if you don't, I'll sack you both and find someone else that will. So those solutions are different on both sides there. So I wonder if for talk, they permit it, get it ready, and then prepare themselves to take on someone else's wasting operation and bring it back to life by doing that, because I think that would probably manage that risk in a way which would be much more suitable to them, and put them in complete control. And by doing so, you're not giving away whatever it is that anyone is, 50, 60, 70 bucks a tonne on top of process costs that people are paying at the moment.
Yeah, look, because it makes so much sense to me that obviously there's MRE upgrades to come once they start actually drilling it. Like, I think Canaccord had a potential target of 1.5 million ounces or something on it. And with Westgold wanting to expand the Higginsville mill, it makes a lot of sense if they grabbed that to put into Higginsville, and as part of the expansion, put the shit in to treat that, like all the proper oxygen circuits to deal with all the sulfides and everything. That makes it makes too much sense to me, which means usually I'm wrong.
Well, I think in this environment, right, is anyone discovering big new ore bodies which can just be the sole feed for a new mill? We're in a world now where there is a huge amount of installed capacity, particularly in that southern part of the goldfields. So, I think the thought process for a lot of these companies is going to start to swing to, how can we make our process facilities more versatile? How can we make them more suitable for 20, 30% ore feed, which is not our own base load, which is going to manage our costs. It's going to manage a few other issues, but we need to be able to smooth them through. And that's something that maybe Westgold should be thinking about. But if they were going to own it, maybe it needs to be an underground mine. So it's not deep enough. Christian should drill 1,000 metres, and if he can find something down there, maybe that makes it attractive to Westgold, because it'd be an underground mine.
Yeah, true. There you go. Anyway, people can change their ideas, I've found. Right, Headers, sensational, mate. Thanks so much for bloody an hour and 20 minutes. I might split this up into two, I reckon. Why have one Hedley when you can have two is my new motto in life.
Well, just don't wait like longer than a week, because you don't know what the gold price is going to be.
I'll have to rip it out.
Everything we talked about was only relevant half an hour ago.
Yeah, that's
true. We've gone up $40 an ounce, Matty.
Oh, love it. Right, mate. Thank you very much for coming on LEVRD.
Been great to chat to you, Matty. Thanks for having me.